Well, while we are seeing gains in stocks, private equity has been seeing some signs of a slowdown this year, including, of course, in the IPO space. So where are investors looking for opportunities in this environment? Joining us now is David Mussafer, Advent International Chairman and Managing Partner, and Mohammed Anjarwala, Advent Global Opportunities Managing Director. Advent International, by the way, private equity firm with $92 billion in assets under management. Gentlemen, thanks so much for being here. Really appreciate it.
Julie, thank you for having us.
So I want to start with you, David, and sort of talk big picture here, because this has been, for lack of a better word, a bit of a weird year in terms of private equity and especially exits from private equity with this sort of rocky IPO market. As we close things out, how are you feeling about it? And just briefly, how are you feeling about 2024?
Julie, I think that's a great way to describe it in sort of a weird and odd year. I mean, in a lot of ways, price discovery has been really difficult in the private markets, and that's largely because of the cost of capital that's risen so much. So you have to look back nearly 20 years to find a 5-year rate for the 10-year Treasury, with the exception of a few years around that 07, 08 time period. And so private market buyers are really recalibrating to try to figure out just how to value businesses in this environment.
And Mo, I want to get your take on that same point as well, because it's an important one. We could be in here for a prolonged period of higher borrowing costs. Mo, what is that going to mean looking ahead for the private equity industry?
Yeah, it's certainly the environment has become a lot more challenging since 2 years ago, and while that creates challenges, I also think there's a lot of opportunity. If you look at the valuations and what's happened to, particularly in the public markets, how valuations have reset over the last 18 months, there are real pockets of opportunity starting to form. And we're seeing this in a lot of different sectors, especially if you look below the largest companies in the US, the Big Seven, the so-called Big Seven. It really is a very interesting time because there's some pockets of value that are forming in certain sectors in the US, but also outside the US. As you know, Advent's a very global firm, and we have a big presence in Europe and in Latin America. We think there's some great opportunities actually starting to form there.
Well, and Mo, talk to me a little bit, explain to me a little bit about Advent Global Opportunities, what it is, how it differs from the broader business, and what you're able to do that the broader firm doesn't do.
Yeah, sure, Julie. So Advent Global Opportunities, AGO, we are the public markets platform of Advent. And as you know, Advent International, $100 billion of assets, it's largely a private equity firm. But we have deep sector expertise, and we've been chasing investments in the same sectors for almost 40 years now. And so we've developed a lot of expertise in the public markets for the IPOs we've had and companies we've bought from the public markets. So 8 years ago, we set up AGO to really invest in the public markets with a private equity approach. What that means is we are trying to really build a concentrated portfolio of high conviction, high quality companies that have, where we can take a really long-term view, a private equity style long-term horizon, and own them for the long term and let them compound.
And David, I also want to get your take on another big issue, which is the regulatory environment. That like financing conditions, it's a lot different, David. There's a lot more scrutiny. Industry roll-ups, they're going to get a lot tougher look. That tighter regulatory backdrop, David, what does that mean for private equity, not just next year, but in the years ahead?
Well, I mean, it's really twofold, but one of the aspects with a more difficult regulatory environment means that in a lot of ways, private equity may be a more preferred alternative versus two strategics coming together. And so we are seeing situations where they might have been a more traditional opportunity, but concerns about a more difficult regulatory or review meant that a buyer that wanted certainty might think more in terms of financial buyer. So, it really cuts both ways. But in the backdrop that we see, it's been an unusual year, as Julie framed, and but it's creating some really interesting opportunities given the environment that we're in.
And David, do you expect any thawing on the IPO front? How patient are your investors right now in terms of exits at a time where it seems like it's perhaps not as easy to exit in that way, at least?
Well, the private equity model is predicated around returning capital. So a public market fund is an evergreen structure. So you have a very different context in the way that you think about investments. For us, we've invested about $7 billion this year, and we've also returned nearly a similar amount to investors through realizations. And ultimately, that's a really important element for the private markets. Today, you're right, Julie, the IPO market is incredibly thin, as we saw from some of the high-profile names that came to the market in October that didn't get quite as warm a reception as they had hoped. At the same time, the private markets are thin, and there's just a much lower level of liquidity across many parts of the financial markets today. So, I think it's going to be some time that it's not going to have an immediate rebound. And we're kind of preparing our companies to be able to operate in a higher cost environment where a 5% 10-year is not an unusual thing, but rather something that we've acclimated to. And then you've got to reflect that cost in your capital structure. So we're having our companies prepared for what could be a longer time period to be able to endure this higher cost of capital.
That is a really interesting point. And Mo, I want to take it to you and what that means for the criteria you're using on the public side, right? You said you got to look below the Magnificent Seven or whatever we're calling them today. Are you sort of using that criteria? Who has this staying power in this high cost, high interest rate environment? Absolutely.
Quality matters. Business quality matters, and that exhibits itself in a lot of different ways. Balance sheet, of course, but a variety of different things around the product, around customer, et cetera. So we spend a lot of time. We're old school guys, right? We really focus on finding that, going a mile deep on one company and really getting to know them. So I think ultimately it has to manifest itself in valuation and entry price, right? This higher cost of capital environment that we're in. Ultimately has to lead to valuations reflecting that. And I do think that's actually starting to happen. You have to look beneath the surface because the overall indices don't really show that. But you look at the mid-cap space, you look at Europe, you look at things in Latin America, actually valuations are quite attractive. And so if you can find the great businesses at good prices, that can make for an interesting investment outlook.
Guys, thank you so much. Great to have your insight today. Mo Anjarwala and David Mussafer, appreciate your time.
Thank you for having us.